All right, hey there. Good morning, everybody. Chris Rinks with Texas West Capital here. It's just a few minutes after 11 a.m. Central Standard Time here on the 3rd of September, right before a long holiday weekend, guys. We've got Labor Day weekend here in the U.S., 2021. I'm coming to you live from beautiful, a little bit overcast, Bernie, Texas, just north of San Antonio. So hopefully you guys are doing well. The big news today, obviously, was the jobs reports. Excuse me, sorry, I got some tickle in my throat here. But we had talked earlier this week. ADP, the expectation was well over 700,000 for new job growth this month. ADP earlier this week noted that they had a 384,000 or so increase. So well off of those highs. So no matter what happened today, it was bound to be a bit volatile. And because either it went with ADP, which was really against the numbers and everybody freaked out, or ADP numbers were off, which they often are. And it gets near the jobs report number is going to be near the expectations and things were going to be. But nonetheless, it was down. We had a, let me check my numbers here. I think we had like what is it? Okay, so 750,000 was what the consensus was. We actually only saw an increase of 235,000. But is that all? Is that all she wrote? I mean, normally that's huge. That's a big miss, right? And that means a bad economy. Everything starts, falling off a cliff, right? But let's take a minute here and talk about why it might not be exactly what you're thinking it may not be. Excuse me. Excuse me. And before I do that, I'm going to say hello to everybody. So, hey there, Mark. Good to see you. Boris checking in. Ross Mark is here. Says not first, but hey, that's all right. Mark Chenard is here. Good to see you. Hank is here. Hank's still calling for mid-80s on the DXY. He uses any chance he can to remind us of that. But, again, we haven't gone past that 94.724 that I need to see for the dollar. So it's definitely quite possible, but we'll see. Let me see here. Who else is here? Bianca's here. Good to see you, Bianca. Tell you Ryder checking in here. He says, good day, everyone. For some reason, I keep seeing this NFP report and thinking to self, ugh, not more NFT hype. Oh, my gosh. Let me see here. Ross Mark said he was only born in the 80s. Man, you guys are a trip. What's up, Spiral Architect? Good to see you. Data checking in. Chris Baker, hello, sir. MK46, is that my NFT in the background? No. That's just something I bought to kind of liven up the place a bit. Y'all can get it too. I can't find the link where I bought it. It doesn't seem to be available there anymore. But if I see another link to it somewhere, guys, I'll let y'all know. What's going on, Chum in the Water? He says, when's that Hummer EV coming in? I think spring of 2023, I think. If you haven't heard, Tesla's Cybertruck has been pushed back to did I say summer? Spring of 2023. That Cybertruck also, that same time thing, I believe, coming in at that point. So, yeah. Man, it's amazing how often the car dealership continues to send you emails once you sign up for something like this. Yeah, it is what it is. Let me see here. Excuse me. The anticipation would be killing you. Yeah, we'll see it. When it comes, it comes. I didn't need it. And I don't ever buy new vehicles. By the way, guys, here's something that I think one of the biggest things that you should know, as far as money goes, the more you spend it on things that, not appreciating assets, okay? The less money you have to make money, okay? So I'm a firm believer in that. I don't ever buy a new vehicle. I've got to think here. I think I might have bought one new vehicle my entire life. This will be the second one. And so, it's just a thing because, if you buy it, if you pay $100,000 for a vehicle and you drive it off the lot, you could try and sell it that day with just 10 miles on it, and you're going to be lucky if you get something like 85 for it. It's the depreciation is huge in the first couple of years. So I usually buy mine a couple of years old. It just is what it is. It's not a matter of money. It's a matter of being smart with your money. Remember, guys, I keep telling you, you have to have respect for your money, right? You can't have it working for you if you're not working for it. Let me see here. Hi, hello, crypto. Good to see you. Nevolusian here. Blaze, what's going on? Let me see. Everybody else in here? Michael Williams, no glasses today? Nah, I'm still trying to fight. I'm still trying to do them. I've got them right here, but still trying to get used to wearing them and all. So we'll do it. I do it when I have to. Oh man. So yeah. Leighton Blue, what's up? Leighton Stone Blue coming in from London. Good to see you checking in here as well. So let's get back to what we were talking about. By the way, guys, you can join us at howtotradetowin.com. We'd love to have you there. Man, oh man, I'm going to tell you what, next week, September 9th, Texas West Capital will be 4 years old, guys. We're going to be celebrating our 4th anniversary. And what that means is we're going to have giveaways and a whole bunch of stuff coming out from through the end of the year here. So make sure you're following me there on Twitter, guys, or wherever else we happen to be. I think we finally just about got everything cleared up for Facebook so we can get our Facebook page going again. We had some issues there with Zuckerberg and company. And so just follow us everywhere, guys. You won't be sorry. We're gonna give away a whole bunch of stuff. We've got new things coming on. I've got a new weekly newsletter that'll be coming out starting in about a week or so. So again, keep up with me there. It's free. And within it, I will probably have a couple of trade setups every, like I said, it's going to be weekly. So every week with that. My gosh, we just got so much, guys. You just wait and see, man. It's going to be absolutely amazing Q4, right? So come along with us. Follow along. Be there. Anyway, will there be cake? I'm not big about cake. I'm not a big cake person. I like some, oh, what's it called there? Cheesecake. I like cheesecake. That's about as cake-ish as I get. Oh, man. Anyway, okay, guys. How come I don't lease my car? Sometimes I do. I tend to, at times, put a lot of miles on a car. Because when I go somewhere, if I can, usually I'm driving. I don't fly as much these days unless I'm going somewhere really far off and I've only got a short period of time. So I tend to put a lot of miles on vehicles, so leasing doesn't always make a whole lot of sense for me. Because, it's always a low level of miles, and then once you get over it, they charge you out the rear end per mile. So, yeah. All right, so anyway, let's get back to this, guys. Follow us, hey, howtotradetowin.com. Join us there, man. You've got all that live streams every week. 3 of them every week. Mondays, Wyckoff. Wednesdays, tips, tricks, and techniques. Thursdays, Elliott Wave. Hot takes. Chart requests, chart critiques, everything, man. Plus, the community is absolutely second to none anywhere, guys. So, let's talk about the non-farm payrolls, all right? So, again, the consensus was 750. We got 235. Normally going to be a really terrible thing, right? And like I said, normally you might look at that, but then you have to look at everything that's making up with it. So you start looking at your average. Let me see here. Well, first we're going to look at the Nfp revisions. Okay, so every month, when the new Nfp numbers come out, they revise the previous month's numbers, right? And so last July was 943,000, and it got revised up to 1.053 million. Okay, so there's a first positive. All right, so a huge increase. It's a pretty big increase there, over 10% there for last month. Then we had the unemployment rate, and so that decreased to 5.2%. And so that's the best we've had it since March of 2015, guys, okay? But that's the U3 unemployment. U8 unemployment was still 8.8%, so it's still coming down. It's 8.8% now. And we haven't had that since prior to the pandemic. So our employment, that's the U6 underemployment. So the underemployment and unemployment are at levels seen previous to the pandemic. So these are big pluses, right? Labor force participation rate. So it's 61.7%. So they expected it to drop to 61.6. So it's one tick up there better than that. Average hourly earnings. up 0.6% for the monthly wage gains, or 0.6%. Yearly was a 4.3% increase, which was well over that 4.0% increase. So almost, 10% better than what was expected. The rise from 4% to 4.3% there. So, all these huge, huge things coming in, right? So these are all big positives that kind of fight off that big negative, right? And so then you ask yourself, okay, well, what's going on then? So there's some possibility now that maybe this is just, just like a knee-jerk reaction to the downside, right? So when you look at it and you delve into the numbers, what you notice for your for the jobs that were lost, the failure of jobs to increase, there were really around that leisure type stuff. Okay, so leisure, travel, stuff like that, and that's a result of what's going on with the Delta variant, right? And so the outside of that, you saw good jobs numbers outside of that. So it's only really that one segment of the economy that's taking that hit. Everything else seems to be doing pretty decent. So okay, so now we're getting an understanding of what's actually going on with these numbers here. Again, if we look at things like the 0.6% month over month increase, as far as average earnings go, and then that huge 4.3% instead of the 4.0, the 4% that was expected for year over year. So, in spite of this lack of job growth and what it was, that seems to be potentially just a temporary thing due to the Delta variant. And I say temporary because, the information out there suggests that maybe there's a top to this Delta variant coming in right now. Now, long-term top or not, I don't know, but, at least some sort of localish top. And so if that's the case, then it's going to pull back, and that other stuff where we saw taking the hit this month is going to, increase back up with it. And then of course, we've got it's the Labor Day weekend. One thing I always tell you guys, if you're a Forex trader, usually Forex traders are trying to get out of their positions before the weekend. And so in this case, especially a long holiday weekend, NFP gives you a reason to get out, right? You get done, get out, come back on Tuesday. If you're paying attention, or if you were there in Discord with us, then I've talked about the fact that the dollar, the DXY, is pulled back so far. It's oversold on so many time frames that there should be at least some sort of temporary bottom, if not a full-on reversal. And so we'll get into that a little bit later. We'll actually look at the chart and show you what I'm talking about there. So there's a lot of that, right? Let me see here. What else do we have? Labor Day weekend. Now, if you are pro ECB or something, pro Euro, well, ECB's got its meeting next week, I believe, right? And it looks like rising inflation over there. And as we know, the euro makes up about 57% of the value, the weighted value of the DXY. So, depending on what's said there, if they're bullish, if they're hawkish on what they're saying over there, I say bullish. If they're hawkish on what they're saying over there, then that could give the euro some strength, which would be a strong, pullback for the dollar there with that. So, maybe, like I said, maybe we just get a temporary bounce into the beginning of next week until the ECB meeting, and then it pulls out, continues lower. As always, you've got the Canadian dollar out there, and it's the oil's been doing this thing. I mean, it did this good pullback, and now it's kind of iffy as to whether it's going to have a little bit further up before it pulls back more. So, there's also that there. The USD CAD makes up part of that DXY as well. So, there's a lot of reasons here. The only reason you have really for a negative dollar, for a negative effect on the dollar from this non-farm payrolls report today was the big miss from 750 and only getting it at 240 whatever thousand there. But everything else in that is pretty much bullish. And like I said, when you look at it and you look at where that what's contributing to that miss in the numbers, it's really that leisure and travel area. So, I mean, hey, if the Delta variant is topping out, the spread on that, and it starts coming back down, I mean, you're going to see all the rest of that kind of increase with that. And so at that point, I don't think there's a lot of negative for the dollar right then. Don't forget, we've also got, so Powell, I don't know. It seems like when he's doing this, this virtual thing, he doesn't feel the need to be as, I don't know. It seems like he's going to be more dovish when he's doing these virtual meetings and whatnot. So, he had the kind of dovish look to, as far as tapering goes and everything last month. We've got that, meeting coming up here in a few weeks this month. I mean, I can't tell you guys, I think we're still going to have tapering. I think, I think the Fed has just kind of painted itself into this corner. You can only continue ignoring what you're ignoring for so long, and then it's going to do what it's going to do, and there's nothing you can do about it. And, with real rates rising and whatnot, I think that we're going to have that. We're going to have the tapering, and the tapering is going to be bullish for the dollar because, it's that lack of buying into the all those zombie companies and holding them afloat. What are they going to do when they have to depend on themselves? Well, with what we're seeing as far as the Nfp numbers and whatnot goes and some of the stuff coming out, well, they might be okay, but, those are the ones that are going to be okay. Not all of them are like that. And so a lot of them are going to face that having to deal with things themselves, right? All of a sudden, it's just them now. And so, we'll see how that goes. We did have the large University of Michigan sentiment drop last time. We had the huge one before that rallied up to like, whatever it was it 80? And then dropped down to around 70 this last time. So it was a huge drop. So, kind of some warnings coming into the NFP this month that may have suggested, it wasn't going to go where they were looking for it to go. But nonetheless, like I said, if we're digging into it, guys, it really doesn't look anywhere near as bad. And I think we might see a strong reversal the other way coming in next week. So we'll see. We'll see. Nothing's guaranteed. It still has to happen. And like I said, we'll look at the chart here in a few. And you'll see that we're pretty close to the invalidation level on the count that I've got there. But in the way in which it's ending, that might be the bottom there, and we might be all right. So we'll take a look at that. But, guys have to remember, just because the Fed says it's not going to or it's going to do something doesn't mean it is or it won't, right? Again, we can go back a few years to 2018. Was it 2018? When they said they were going to have, it was the summer, and they said they were going to have 5 more rate increases within the next year. And I came out here on YouTube and I told you guys, no, they're not. I said, this is it. That was it. Not only are they not going to increase, but they're going to decrease over this next year. And what happened? Sure enough, they never rose, they decreased. And I think, we're kind of doing the same thing here. Powell's out there wanting to say these things to make you believe that the economy's doing all right. And if you don't believe it's doing all right, don't worry, the Fed's going to take care of it. But, again, the Fed doesn't control the market. If the market, and what I mean by that, guys, it doesn't mean they can't give, temporary or knee-jerk reactions or support a little bit as things are going. But if the Fed could really control the market, we wouldn't have had 1980. There's so many things, guys. We wouldn't have had 1929, the 1930s there, the Great Depression. We wouldn't have had so many things coming up to it, but other big ones, 1987, Black Monday. We wouldn't have had the dot-com bubble, the crash. We wouldn't have had the great financial crisis in 2008. If the Fed had control over the market, we wouldn't have had those. So stop thinking that they say, oh, we're going to do this and we're going to be able to keep the market up and make it all better, because they don't have a track record of doing that. As a matter of fact, their track record is completely opposite, guys. Completely opposite. But yet everybody still goes into this, oh, the Fed's going to do this. The Fed's going to save us. No. They haven't done it, right? So, this is this thing where we have to get out of our immediate, sound bites and our immediate mindset and just step back a minute and think about what's actually being said. All right? Because if you're not, you're going to get caught up like everybody else, and you're going to lose your money like everybody else, and that's life. Now, none of what I'm saying is guaranteed to happen, just like none of what the Fed says is guaranteed to happen. But we do know that when it comes to the Fed, historically, there's never been a time where they've proven that they control the market more than other than just this temporary thing. And what I'm trying to say is that, let me see, how do I say this? So what I'm trying to say is, ultimately, all right, you guys need to think of it this way. Ultimately, the Fed does not control the market. If the market is going to go down, if the market is bearish, the market being the participants are bearish, the market will go down, period. There's nothing the Fed can do to stop it. If the market is bullish, then it will go up. There's nothing the Fed can do to stop it. Okay? If the market's kind of hem and hawing, well, then the Fed's got a little bit more room to kind of, nudge it around a bit. But again, guys, you just have to think at the end of the day, everybody's out there saying, oh, the Fed, oh, the Fed, oh, the Fed. But never in the history of our country has the Fed actually controlled the market, right? Because again, if their goal is this unemployment, this full employment, this they've got these two-pronged goals here, and yet they keep failing at those, right? It does it for a bit, and then they fail. So stop thinking that it's the Fed that ultimately controls it, okay? They can guide it a little bit while we're in it, but when the market is going to be bearish, there's nothing they can do to stop it. And when the market's going to be bullish, there's nothing they can do to stop it, okay? So let's pay attention to that as we do it, okay? Remember, QE is not about money floating around between you and me, guys. QE is about money that goes in there to inflate asset prices, okay? It's about that, and it's about putting money into the Federal Reserve so that the banks can, because the banks have laws about how much they have to have in reserve for what they can loan out. And so the Fed's Reserve, they can reference that and say, look, we've got this much here, because that's what the Fed's Reserve is for. So we can make these loans. But ultimately, the banks still have to make the loans, guys. And the banks making the loans is where the inflation that you're thinking about actually happens. So if you have less of that bank loaning going on, that is disinflationary, potentially deflationary. If you have people paying back loans, that's the same way that creating loans at the bank level creates inflation in the money supply, out here between all of us, sending money back in and paying off your loans and whatnot takes the money out of the system. That is, again, disinflationary, potentially deflationary. All right? So this is what's really going on. With the QE money that goes in to inflate asset prices stays with your primary dealers, basically, and that's what it gets all in. And then you have the reverse repo facility, which is where your banks and your money markets and all these guys that have all that money stick it overnight. It's to pull money out of the system. That's what it is. That QE money out of the system. And now these facilities are permanent now. And again, I keep going back to this. If the economy was doing so great, if it was so absolutely wonderful and there were no cares in the world, why are the banks putting all this money into the reverse repo overnight for this little bit of tiny little, interest they get on it, rather than loaning it out to you and me? It's not that banks aren't loaning, but they've made it a lot more difficult for you to get a loan now. So, there's a reason for that. So just keep watching it, all right? Let me see here. Merv, what's going on? She says, I loved what Sven said today. Year 2050, Fed owns everything and you'll be happy. Right. But, there still are limits to what the Fed can do constitutionally here in the U.S. They can't send out direct payments to us. That would have to be something that the legislature, Congress, would have to actually pass a law that says they could. Right now, it says they cannot. So, UBI via the Fed is not possible at this moment. I honestly think the way in which they circumvented this idea of how they actually buy this company debt right now, I think, these facilities they have now to do that, because they can't do it directly. The Fed cannot go out there and buy corporate debt. But they've created all these facilities, so you can kind of just if your fence is here, right, and the fence stops right here, they got these little facilities that work around the edge of that fence. So they don't actually have to cross over. The intermediaries do it. And I still think, again, I do have a law school degree. and I think I don't think it's necessarily completely legal what they're doing. But, to challenge it and do all that, I'm not sure that's going to become a big thing anytime soon. So they'll continue doing it until they're told they can't, right? But it's not an outright in your face, oh, look, the law says we can't do this, but we're going to do it anyway. Again, they set up all these other facilities to intermingle with each other to get that money out there and bring it back in a quasi, hop over the fence or around the fence kind of thing. So, it's kind of crazy. But anyway, so these reverse repo facilities now are permanent here in the U.S. Before they were just a temporary thing put out there. Now they're actually permanent, and so that's kind of interesting. When you look at that. But again, guys, at the end of the day, it comes out to the Fed's going to say what it needs to say to get you to believe them, to get you to do the things because you are the market. That makes the market continue to grow. And we are a debt-based economy, just like pretty much everybody else out there. Europe, Japan, China, everybody's debt-based. And if you are debt-based, the only way your economy grows is by continuing to get money out into it, right? For people to continue to overextend credit, for you to go out there and take on more credit than you need and to spend more money, to circulate more of that money around. That's the only way it does. And when you start to slow down, that has a detrimental effect on that debt-based economy. So the Fed is going to do everything it can, and the government can jump in when it can, to do everything it can to get you to continue playing the game. As long as everybody plays the game, ultimately we're okay. Yeah, your the value of your fiat, debases, it decreases. But the rise with everything else, as long as everybody's playing nice and doing it, it's all fine. It all works. But at some point as human beings, we get to that point, we go, listen, I just can't do anymore. I'm not going to keep overextending myself here. I'm already stressed out with how much I owe and how I've got to do all this. Right? And so at some point, it's just like, listen, no more. Uncle, yeah. And so all of a sudden, all that they need to continue doing and pushing all that gets pulled back. And when they do that, again, there's nothing. The government's go out there and try. They're going to try and use a stick and carrot, guys. They're going to give you beneficial reasons of why you should be spending and pulling out more credit and doing all this stuff. But if you don't, they've always got a stick. What they found, though, is a stick doesn't really work. That's why the Fed's all about this. Hey, listen, we don't want to go negative interest rates. That's the stick. A negative interest rate says, well, if your money's in the bank, you have to pay the bank to hold your money. Which, if you think about it, okay, it makes sense. They're doing a job here, right? They're holding your money and blah, blah, blah. Which, by the way, guys, in case you don't know, especially here in the U.S., once your money goes into a bank, you actually don't have that money anymore. You have a claim on that amount of money. Yeah. So make sure you read, if you didn't know that, make sure you read your bank or your credit union when you join all their stuff there. Yeah, you don't actually have your money when you put it in the bank. I know your balance says, $10,000 or whatever. You have a claim on $10,000. What that means is if the bank goes out and they're not, if the bank goes out, you're kind of screwed if they're not, if they don't have the government, if they're not FDIC insured. Because even then, they're not paying it. The government's paying it for them. So there's a lot of little intricacies in here that most people aren't aware of when it comes to banking and money, the Fed, stuff like that. But yeah, what you see are the sound bites all going around crypto Twitter and everywhere else on social media. So you always want to make sure that if somebody does a sound bite and you immediately go, yes, stop for a minute, step back and go, wait a minute, is this really correct? Because we have a tendency to jump onto those sound bites. And if you're just jumping on a soundbite, you're not really thinking it through. So you're probably missing a lot of stuff. So yeah, a lot going on there. Let me think here. So yeah, again, at the end of the day, the Fed comes in and they've got to try and convince you to do the things they need you to do, which is to take out more loans, spend more money, get more of that money circulating between all of us here. And then the economy ends up doing better. But that's all they have. They have the mouth, guys, okay? They have the mouth. That's their biggest tool that they have. They go out there and they talk. But when you decide in a big enough group that enough is enough, it doesn't matter what they say. Well, guess what? The economy does what it's going to do. So Just some thoughts there on everything. And, putting together all this, guys, again, what I say, it may not be true. It may not turn out to be correct. Or maybe not turn out to be fully correct. Or maybe it does. There are so many moving parts, so many intricacies in what goes on in the economy, both locally with your government and worldwide, that it's hard to know for sure what things are going to do. You make a little change here in this segment of what you're doing, it has ripple effects everywhere else, right? But right now, I think the way I kind of look at it, I think is probably the best way that we can look at it right now. Because it makes the most sense. Again, this idea that the government or that the Fed controls the market, historically, there's no support in that at all. Not even one time. Because the market still drops. It still crashes. You still have depressions. You still have recessions. And if the government really was completely in control of everything, in the market, then you wouldn't have those. Right? Leighton, yes, pretty much about QE, yes. It's just money comes out and goes right back to the Fed. Like I've been saying, guys, it's a ledger thing, effectively. Hey there, Brian. Good to see you, man. Let me see here. So that's kind of where we are here. Hank says we made a choice to base our economy on continuous growth, no switching economic models now. Oh, I never made that choice. People who were elected by other small groups of people made that choice. whether with or without the support of their people that voted them in. I didn't make that choice. So yeah. And neither did, well, I don't know. Maybe you did. Maybe you voted for it. Maybe you wanted that. And it is what it is, guys. I'm not here to say it's good, bad, or otherwise. It is what it is. And so, that's kind of where we are, right? Are expectations arbitrary, like the figures expected for the NFP? No. They bring them in. They look at data to figure out what these and they do their what do you call them? Their polls and whatnot to get the data. They don't just pick it out of the rear end or anything. Yeah, no. So yeah. So anyway. So yeah, there's kind of like what we're going at here, guys. Next week, I think there's a good possibility we could have an up week for the dollar, which means pressure on everything else, which would make a lot of sense. I mean, if you look at things like, let's jump on over here to the Bitcoin, right? It would make sense to rally up through the weekend and then pull back next week. So dollar goes up next week and Bitcoin pulls back, Ethereum the same way. Ethereum, pulls back and then back up. So we'll continue to look at these things here in a minute. But right now, speaking of Bitcoin, so locally here, as we've been writing this out here, we had the 1-2 and then this 1-2 working on a 3. So right now I've got a minimum wave 3 target up here, the most local count, right there at about $54,690.50. Which should lead to a minimum wave 5 of wave parentheses 3, the little bit larger count there, at around the EQ of this previous. This is the EQ, the equilibrium point here of this previous range, this distribution range here. So wave 5, wave parentheses 3, has a target of that area. And that makes sense. You push up into the high volume node here, pull back, push up, pull back, and then push out. And then you push out, and then you pull back to it to find support and then continue up. I mean, so it makes a lot of sense if you're trying to work your way through it. So far, nothing wrong or nothing different here than what I talked about back when we were down in this area. I said first target's going to be this, top of the range here. I said if we break out of that, I said we should have a pretty good move up to this area right here at the previous, right below the previous distribution area here, and that's where we're at right now. So yeah, not a whole lot terrible going on there. Potentially a double bottom right here, heading up. So we got this right here. So if it is just pattern target wise, whoops, let me see here. That'll give you, whoops. Let's see if I can find it here. There we go. All right. That gives us a pattern target up here of right up into this supply structure right here at about 52,426. So if you're looking for shorter targets along the way, you can look at that. But yeah, I mean, overall, looking pretty decent. We're above 50 and holding for the moment. Again, looking at this as a potential 1-2 right here. Yeah, because if we zoom in here to the 1 hour, I don't know. I guess it's possible. There's an alternate count here. I guess it's possible this could be a 1, 2. 1, 2, 3, 4, 5 gives us a 3, 4. And then ending diagonal here is a 5. So if we get a stronger pullback here, from the R1, we might see it targeting down here around 49,375, or even to the pivot again at 48,540 or so. But ultimately should just be for further upside. The only time you should get concerned is if price drops below wave parentheses 2 down here at 46,537 and 62 cents here on Coinbase. If we drop below that, then that means we'll likely drop below this larger wave 2 here. And again, in that case, I think, just kind of thinking out loud, I think it's going to be an ABC down, ABC up, and then 5 down, which will probably get you this target right here at the EQ of this demand structure, about 45,780 or so, right there. By the way, you'll notice if you paid attention here on the 1 hour, we had hidden bullish divergence here as we made this low at the pivot. So, we had 3 waves down. It was about the 50% retracement, I believe. There was a lot of reasons to go long at this swing low here, guys. Yeah, see, 50% retracement, 3 waves down, pivot, hidden bullish divergence. We were down here oversold and crossing bullishly. There was little to no reason that if you're a trader that you shouldn't have gone long. If anything, I mean, you could have done it right here with this doji. If you wanted to wait for confirmation, here's your confirmation. This bullish candle afterward, you should have been long at least from that heading up. As a trader, a shorter term trader here on the shorter term charts, there was no reason not to go long there. Just so you know, okay. Let me see here. Okay, let me kind of catch you guys. I'm sorry. Let me kind of catch up with you guys here. Claudio, what's going on, man? Good to see you checking in. Kinetica 46, what do you say? You're probably the most humble and well-informed teacher out there. I appreciate that. Thank you. Thank you. It doesn't do me any good to be boisterous or anything. Why does that? Well, that doesn't help anything, so I don't see any reason why I should be. And as far as being a well-informed teacher, I'm glad that you guys feel that way, because whether you listen to me or not, whether you want to believe me or not, at the end of the day, all I'm trying to do is help you guys with some knowledge here. I mean, at the end of the day, that's what it is. And so if I can do that, that's great. If you choose not to listen, that's fine. That's on you. We just have to deal with it, right? I get a lot of knowledge just by following your detailed videos and free content. Definitely helpful. Have a blessed day. I appreciate you, man. Thank you for saying so. What is happening? What's up? I see you checking in, man. Let me kind of catch up with you. Anybody else joining in already here? Oh, is that Diego? Yeah, I knew it. It had that dark blue on that blue background. What's going on, Diego? Always good to see you, my friend. Carol Ack is here. Oscar's here as well. Let me see here. I think I said hello to Merv already, so hello there. Let me see here. Asim Risk, what's going on, man? Says, let's see here. Would that have been the 28th with the Litecoin Bitcoin cross on the Stoke with contracting swing low stop? I'm not sure which one you're asking about there. I'm sorry. Let me know what you're asking about there. Help me understand, and I'll do my best to answer the question, as always. So I mean, there is the possibility that maybe we've got a 1-2, or maybe a 1-2 here, and then 3, 4, and then 5. But again, that pullback should just be in this area, and it should continue up higher. But right now, I've got this as a 1-2, and maybe a leading diagonal here. So a 1-2 on that pullback. Where I think it's probably the more operable count at the moment. Yeah, potentially, yeah. Just if it's going to pull back, A, B, maybe a C down here to around 50,000 or so. and then potentially full up. That'll get you to 38.2 on the retracement. 50% right there around 49,700. So you've got the 1 hour supply structure or demand structure right there. So that would be my secondary target on a pullback. But again, this would just be a 1-2 or a 1-2 here. And in either case, that just gets us going up toward, toward that wave 3 target at least. If we get the 50% on that, it gives us, this wave 3 would move up a bit higher to 55,180 or so, 181. So still in that area. We'll see how this plays out right here. But yeah, I think it's, right now my count, I think says 1-2, and then we'll get this 1-2 here and work itself up there. And as I said here, guys, remember I was talking about this, how we had this over here. And I said, okay, yeah, I noticed that there's potentially the same thing building right here. Remember when I did that? And I said, but, again, with the way we get this sideways here, kind of where you're just kind of pushing up a little bit by little bit and pulling back into it, and you get this consolidation here, that it's either a distribution or a accumulation area, right? And so if I look at this area here with this volume right here, it looks more to be, I was mentioning this the other day, looks more to be a reaccumulation going on rather than distribution. So that would then, of course, add into the whole idea we're heading up higher here. But as I said, usually when we get this kind of consolidation toward this, like this here, so you get this part, and then you have this, from a wide to a narrowing here. Usually the breakup is a nice strong breakup. And so we've got thirds of thirds of thirds on this breakout right here. So that would make a lot of sense to get this strong move up toward the mid 50s there, mid to upper 50s, as a third of a third of a third kind of thing, as it plays out wave count wise. So yeah, not a whole lot here arguing against what I've been talking about. So while we remain below, above this wave 2 right here at the pivot on the 1 hour at 48,349 and 66 cents on Coinbase, while we remain above that, there's no reason to even think about lower. We drop below that, well, then things get a little bit interesting, but we're still good here. So you should watch wave 2, wave 2, wave 2 here. That's where you should be watching. Oh, you were talking about to Hank. Oh, okay. I definitely appreciate having Hank here. Obviously, we don't always agree. But that's okay. I think one thing that maybe new traders should learn more, again, it comes with that humbleness, I think, is this idea that just because you don't agree with somebody about what's going on with price doesn't mean you guys have to hate each other. More importantly, that goes to life, guys. You can be friends with people who don't agree with you and that you don't agree with. It doesn't make them bad people. Unless their intent is to hurt somebody else. Then I would argue maybe they aren't the best people. But for most of us out there, guys, our intent isn't to hurt somebody else. Our intent is just to view things the way we view them, And so, that's part of being human, guys. There's a lot of, God, there's just, there's so much crud going on in the world, guys. Why would you choose to do anything else other than do your part to hopefully make other people feel better? Or to at least not make them feel like, dirt. I just, again, we talk about online, and it seems like the default action for most people online is to act like they ain't got no common sense. To act like their mama didn't raise, a decent human being. And I'm going to tell you what, man, I would be embarrassed to act that way. And I would be beyond embarrassed if my son acted that way. But, people get out there, they learn that attention is attention. And they just want attention. And I end up feeling bad for them. I feel sorry for them. Because, man, what a way to live your life. Right? What a way to live your life to where you have to purposely go out and try to make people feel bad so that you can get some sort of negative attention. I mean, there's no win in any of that. If I'm talking to you right now, what I mean by that is if you're listening to me and it's hitting home with something you're doing, change your ways. It's all right. You can change it. You don't have to be this person that you've been. That's the great thing about being human, guys. We've got the ability to change our actions. to make different choices. But you have to actually do it. Trust me, man. If you approach the world in that better way, the world is so much better. It is so much more beautiful. The colors are more vibrant. The music it just hits your soul better. If you constantly view the world and yourself as this piece of dirt in it, that's what the world's going to feel like. Whether you believe you can or you can't, you are correct. Whether you believe you do or you don't, you are correct. It doesn't mean that it's true. It just means that your subconscious tends to believe whatever you tell it. So why not try to be positive, guys? Anyway, so just wanted to say that there. Okay, guys, seriously, life is more than trading. Trading gives you the opportunity to have an amazing life. It really does. Because, people say, well, money doesn't make you happy. No, but it's easier crying into a $100 bill, right? But in all seriousness, when you take away a lot of the stress that has to do with bills and, your future and stuff, worrying about those things, and you're more secure, it's easier to take a better approach to life. Life tends to look a little bit better, a lot better. So, yeah. Anyway. It's all just social constructs in the grand simulation. The grand screen simulation. Oh, man, you guys are great. Truth is not relative. Truth is not relative. Truth is truth. Your view of something as true or false is relative. That's what's relative. But absolute truth is absolute. How you view it is what's relative. Let's make sure we understand that. So there we go with Bitcoin. Let's jump over to the dollar, guys. So again, as I mentioned, we're pretty close to that invalidation level here. So I've got this here as a 1-2-1-2 here. Definitely pretty close to the invalidation down here at 91.784. But things we can notice, we did bounce just above this daily demand structure EQ. So like I said, if anything, maybe it's a temporary bounce here. Maybe this is a top, and I don't know, maybe we've got a 1, 2, 3, 4, 5 rather than an ABC as I have it here. But even if we do, we should have a good rally. And so what I'm going to look for, I'm looking for this potentially here as wave C as an ending diagonal. And then we get this, this drop down below here, which is potentially a... what do you call it there? Throw under. And if it is, we should expect to see it then rally up and through. No guarantees, obviously. We can see that we are finding support around this S2 pivot on the 1 hour. Even though we've dipped below it, it is around there. So our first thing I'm looking for is a breakout above this descending wedge resistance, which will take you above the channel EQ. By the way, you notice it basically just barely dipped right below the channel EQ. So again, another throw under there of the channel as well, rallied right back up. So if you're a breakout trader trading the breakout of that channel, the breakdown of that channel, you got caught. So we're looking for that breakout above. Here's your first clue. Second clue being the breakout of the descending channel resistance. Gives you a pattern target of 0.698 above the point of breakout based on the height of it. What you're looking for is for price to carry above wave B over here. There we go. And that should add confidence to the count. But again, ultimately, guys, I still need to see the breakout above. Let me go over here. I don't know. I guess I removed that somehow. This right over here, this 94.742. Because on my count, that's the fourth wave top there, the fourth wave resistance. And so a breakout above that on the macro would indicate, okay, that's our first real big clue that the bottom may be in. Until we get above there, as I continue to tell you, price is still vulnerable to further downside. Okay? So nothing's given at this point. We'll continue to watch how this goes. We have a lot in this area here. We have a lot of support here. So if we're breaking down below that, I think that really increases the case for the possible movement down to a new lower low. But as long as we're in this area, I think there's still a good chance that we could head up further there. And even breaking down below, it doesn't guarantee that we won't, but at that point, it really starts looking interesting. I don't know, maybe we get an ABC as 1, 2, ABC as 3, 4, ABC as a 5, some kind of leading diagonal maybe. Lots of possibilities here. But right now, we're oversold on almost all the time frames other than the daily here. But the daily, we did hit the EQ of that structure there. And, we do have the S1 pivot on the daily right here around 91.73 as well. Something to watch there. Again, when you're just playing pivots, moving in sideways between the pivot and the S1, look to target that area and then reverse. And if you can get a breakout back above, then usually that's a pretty bullish move. So, yeah, it's definitely some possibilities here. Maybe even, without the counts on here, maybe looking at this, maybe we've got a 1 up here, and then this is an ABC down, an ABC up, and then 1, 2, 3, 4, 5. Gets us down into this area as a flat correction here for heading up higher. That's another possibility without even looking at the counts that are on there and whatnot. But right now, while it remains, we're going to keep the count that we have. If you can get a breakout above this daily pivot here at 92.74 or so, that should be a pretty bullish indicator there. And then, of course, you'll just want to see some follow through the swing high on that. Kind of zoom in here a bit. Yeah, so we'll see what happens with all that. Let me see here. Let me kind of catch up with you guys here. Let me see here. Oh, we're having a discussion about truth here, right? I'm sorry for getting that going, guys. Remember, I've got that philosophy background with my structured education. And so I again, always approach it from those kind of angles. So I didn't mean to get you all started on that. Black Man's Guide, what's up, buddy? Good to see you checking in. Bianca is correct. It's been a philosophical debate for ages, the search for what's good, truth, and beautiful. That's right. That's right. Lots of variables, exactly. Let's see here. Okay. So that's what we've got with that. If we jump on Ethereum here, guys, so this was my what we had yesterday evening for the updates for Tier 3 and Tier 2. And I gave them a couple of local targets here, but I said if it continued up, we'd look for a target around the R5 pivot, and that's pretty much what it did here. Didn't quite get up there, stopped to, $20 short. But it does look at the moment like we might have wave 3 completed. Excuse me. Actually, you know what? Did I update this? I might not have updated this. I think I updated this as potentially a 4 right here. And then on Twitter, somebody asked about, or they mentioned something about it, and I think that's where I said, let me look it up here real quick. I think that's where I actually mentioned that it looks like it's just a flat correction right here. Let me see, where are we at? Give me just 1 minute, guys. I'll pull it over here for you. Let's see. Oh, there we go. Maybe is that it? Ah, yes. So right here. Let's see here. Wait, no, this was Bitcoin. Oh, this was Bitcoin. I mentioned that it just looks like a pull wave, wave 2 pullback. Only hit the 50% retracement, currently in 3 waves. That's where I was mentioning that there. Let me see here. But right above it, I think, was the Ethereum comment. Nope. Sorry, guys. I should have had this better prepared. But you don't mind, right? Let's see here. Maybe it was first. Lord have mercy. It's somewhere in there. You guys can come to my my Twitter feed over here, my Twitter page there, and whatever it's called. God, I sound so old sometimes, don't I? Not with all the slang and everything you guys use. But there was a comment somewhere in here. Was it in this one? No. Anyway, somewhere and then they mentioned about the daily. I think they were mentioning the daily potential bearish divergence on Ethereum, and I mentioned that. Did you post it under here? Maybe. No. Okay. But anyway, so somewhere on there, guys, you'll find it. And I mentioned that it was just looking like a flat correction here, and sure enough, it was. And now we've got 1, 2, 3, 4, 5. My targets, of course, were these red lines, and then if you got out of this cluster here, then it was this R5 pivot. That's the targets that I gave there for Discord from this point down here, from this low over here. So, yeah, flat correction, ABC down, ABC up, 5 down, 1, 2, 3, 4, looks like 5 done. So, you know, if it is, then I would be looking for this, God, this could be a larger wave for it, isn't it? Man, that's from down here. So what kind of thing do we potentially have here? Yeah, so again, if we're going to get a larger wave 4 pullback here, I think, you know, we've ran the pivots here on the 1 hour. I think pulling back toward this cluster right here, you've got this ending diagonal followed by this triangle. That's a 38.2 retracement there around 31.70 or so. If we get a pullback below this wave 4 right here at around 37.10, then I think we're probably looking around this area. Now, it's possible we could find support here at the top, right around 33.80, 300. Oh my gosh, 3,380 to 3,400 area. But I think we're probably coming back to the high volume node here if we do that. The only other thought is maybe this is just subdividing here. So if we get a pullback here that stays above wave 4, this low here, and then rallies back above, then we'll just look at this as 1 of 5. So it'll go 1, 2, 3, 4, 5 up there higher. But right now, we can't really tell which one it is. We do have this bearish divergence here on the 1 hour, as you can see. We did have a lot of supply coming in here, as you can see right here at the swing high. So that makes me cautious. That's usually a sign of some kind of, at least a local top, if not a reversal in progress. So now you need to see, do you have follow through to the upside? If you have follow through to the upside, then that shows that you're really bullish. Follow through to the downside is what we generally would expect with something like that. So that's where I'd be looking on that. Let me see here. Were the 4,000 Ethereum sellers hoping for a pullback day trade or largely exiting? Well, I mean, for me, it would be profit taking because it's, you know, it's just parentheses 3 there, you know, and then load up again down here around that 38.2 retracement for your wave 4. I mean, if me, that's what I'm looking at. I'm not looking at an exit at that point. I'm looking at a retracement to enter again. So just profit taking is what I would be looking for. Hank loves his cup and handles. He says it looks like it may be setting up for a perfect cup and handle. Nothing's perfect. And that's pretty ugly for a cup and handle. It is certainly not perfect. I would have issue with this as a cup and handle because of how deep this retracement is in it. When it comes to patterns, the more you deviate from the perfect pattern, the more likely that it's not going to be that pattern. And so for a cup and handle, the cup, you really want price to hang around them lows as you build it. When you have this large move up, halfway up into what would be your cup, that's usually a clue that it's not. You know, so that's one thing I would look at there. There is a rounding bottom on the swing lows here, something I've talked about previously, found support right in this area. Looking at this is pretty beautiful here. You know, you've got this good move up, sideways, big move up. So again, could see a pullback to that and then a reversal on out of it, then back to the all-time high and then higher up. Potentially. I know I pushed it up there to 13, 14,000. I wasn't telling you it's going up there, trying to hint, wink at you. But yeah, you know, I think there's a lot to be said for for this just being a pullback area here toward that previous couple of weeks, and then kind of continuing up higher as I was looking at that smaller time frame. Yeah. Let me see here. This NFT stuff is giving you 2017 ICO PTSD. Yeah, you know, exactly, guys. I know people don't want to believe it, and they all think they're great traders because they buy these NFTs that really, guys, I mean, seriously, some of the stuff you go seriously. And then they sell it to somebody else who's probably a bigger sucker. But as long as you aren't the biggest sucker, it's hot potato, guys. You just don't want to be the last one holding the bag. I really think this whole NFT thing right now, I'm not sure what the future holds for it overall, but I think right now it really just is pure speculation. Again, notice by the idea that you can buy a rock with some shading on it, a JPEG of a fake rock with some minimal shading on it, and pay, you know, thousands, tens of thousands, hundreds of thousands of dollars for it. That's nonsense, guys. You cannot tell me that there's anything other than speculation value in that. It doesn't make sense because you wouldn't normally buy that picture. I mean, that's the reality of it, guys. Nobody would normally, I can't say nobody, there's probably one person or maybe a few out there. But generally, people aren't going to buy that picture in real life and go, oh my gosh, this is so beautiful, I want it. Right? I'm not even sure if you're getting what I'm saying there because you go, well, some art's really ugly and people still buy it. Yeah. There are other things involved in that. Have to do with, you know, the particular artist and what's going on. But just in general, guys, something so simple and basic being traded for such a high price. Don't kid yourself, guys. Everybody's an expert in a bull market. Don't kid yourself. Don't believe your own BS. The guys who are making a lot of money with NFTs right now were the ones that bought a few months back. Is there still money to be made? Sure there is. But I'll tell you what, if there was a top coming in the market, NFTs are going to be one of the first things to take off, I believe. Just because of how speculative it is right now. Even more so than cryptocurrencies in general. Because now you're paying that, but then you're paying these huge gas fees, right? On Ethereum there to get them for those. So, yeah, I'm just being a boomer. I know. It's an easy derogatory thing to say, right? It's an easy way to just kind of do that to me, right? It's the funny thing about boomers that have been trading, you know, for 25 years, even though it's really my dad's a boomer, but is the fact that we've been through a few things. And so we've got a lot more to compare what's going on against than most of the new traders today do. Even if you're older, if you haven't been a trader or, you know, a serious market watcher, market analyst or anything all this time, you're still susceptible to getting caught up in, you know, a lot of the nonsense. So, yeah. Let me see here. Telluride says he's bullish on NFT functionality and bearish on all this stupid low effort, low skill art. Yeah, there was let me see. There was a post here, and I don't know if people really got it. But I'm going to put it here, and maybe you guys can think about it and see if you get it. Let me see here. The money from Jeddah began to breed, first slowly, then convulsively. While I slept or was drunk or made love or smoked a Benson on my porch, my money worked. And as far as I could tell, with smaller effort and for greater reward than I did. So if you don't know what that means just yet, do some time thinking about it. By the way, Reese Witherspoon, you know, when we talk about top things, right? And when I start talking about top things, people think, oh, it has to be right now. No. And I actually had to put it in there. I had to say, no, it doesn't mean that price necessarily rolls over right this minute. Now, obviously, it pulled back a tiny bit around that time, but that isn't what I was talking about. What I'm talking about is Reese Witherspoon, somebody who likely isn't very involved in her own, if she has a stock portfolio or something. I would assume she has because she's got a bit of money, you know. I would assume, though, she probably has somebody else doing it for her. And so when you get these big name people who feel the need to publicly say, hey, listen, just bought my first Ethereum, let's do this. You know, the excitement, you could feel it. She's brand new to this. And so at the tops of markets, we tend to get retail who is new to things like this. And the problem is other new retail are going to look at this and go, oh my God, she's smart, she's pretty, she's rich, she's powerful, she knows what she's doing. This confirms my bias that everything has to keep going up forever kind of idea, right? That's how people get. The rest of us that have been around and been through a few cycles, we kind of look at something like this and we go, okay, well, retail's getting excited off this. I don't need to. And as I say, it doesn't mean that the top is in right now, but it means that the top is this gradual building up of stuff. And this is what I've been explaining to you guys for a few years, right? And so you just make note of it. It doesn't mean you can't trade it. It doesn't mean you can't long it still. But it means you have to be realistic with where you likely are within a cycle. And when you see stuff like this, you should be careful. It could still go up. Ethereum could go to 10,000, 20,000, whatever, and still go up. And you say, oh, well, then what's the use of mentioning this? Well, because this is telling you to be careful. Otherwise, you're getting in there going, oh my God, it's 10,000. It's going to keep going up. It's 15,000. It's going to keep going up. It's 20,000. Oh my gosh, I'm going to be so rich. Time to buy now. And then it turns and leaves you behind. Holding your Ethereum, right? Its price just sinks without you. The goal is to try to get an understanding of where you may be within a cycle, guys. The goal is not to call tops and bottoms. You know, retail sometimes tries to force us into that, and maybe we'll take stabs at it, professionals. But the goal isn't to necessarily call a top or bottom. It's just to understand where you may be within a cycle. It's about understanding the trend. Does it have further to go? And the more money you have, the more generic that becomes, the more general it becomes. Looking for these larger time frame areas of support and resistance to potentially buy or sell. You're looking for things like this over the larger term, which may be saying, okay, maybe we've got some larger term top coming in. There's a difference between trading $100 or $1,000 and trading 10 million or 100 million. There's a difference in that. Managing that. Let me see here. Just kind of catching up with you guys here. I missed a lot of stuff. Looks like you guys are talking about Ethereum and NFTs. Let's see here. The true top was Tom Brady, Kevin says. Oh, man. Let me see here. Just in time, what's up, man? He says, I think we're getting close to a top, not so much in terms of price as in terms of time. For what, Justin? Are you talking about just for Ethereum, which is what I was just talking about, or are you talking about for overall everything? Ventru81, what's going on? It says, heavy into crypto and love my trailing stops. Man, trailing stops are the way to be. As long as you're doing them correctly, right? As long as you're doing them intelligently. So that's what we're looking at with that. If we look at oil, it's possible that oil is topped here. It's also possible that maybe we've got a 1, 2, 3, 4 as a flat, and we'll still have a 5 going up here. I've got a target if it does break out higher. If it doesn't drop into wave 1 here, so the swing high up here at right there at 68.69. As long as it stays above that, it's possible we've got ABC down, ABC up, and we're getting 5 here for a flat. And then potentially a target up here of around 71 to 71.26. But then I think that's probably a wave 4 there. It's a deep wave 4. But it remains, we're looking at a leading diagonal coming off of this A here. And so wave 4 is valid as long as it doesn't go above wave 2 over here, which is $74.23. If it gets above that, then it invalidates it, and I guess, I don't know, maybe we can make it a 1, 2, 3, 4, 5 as a leading diagonal here. But really, I'm not concerned about further upside until we're breaking out above this swing high up here. Right around $76.98. So right now, we'll see if we can get this further down here. And of course, if oil continues to drop, and then especially if oil drops and the dollar rises, your USD CAD long will be a great trade. because both those things that affect it will be affecting it in a positive way for the dollar. So definitely something to look at there. Let me see here. Need $80 a barrel to start extracting shale, Rossmark says. At least. Yeah, remember, guys, as long as oil prices are high, the U.S. is going to lead the world in oil production. And we're going to do that because there's a certain control over the world in doing that, right? But extracting oil from shale, horizontal drilling, fracking, these are horizontal drilling is a very expensive process. I've talked to you guys about this back as we got into May of 2020 when we saw that the May contract for WTI close out around $40 negative. And I discussed how the U.S. had become the leader in production of oil worldwide with the advent of horizontal drilling, and how the rest of the world really comes to the U.S. They hire experts in the U.S. to teach them how to drill, because the U.S. is the leader in oil, drilling and techniques and whatnot. Again, we came with the whole horizontal thing, but it is expensive to do. And while money was rolling freely there in the mid 2010 to 2020 area there, when you got around 2015 to 17. Money was flowing pretty freely. So you had these big private equity firms and banks were loaning like there was no tomorrow, and it was easy to get money. So even though it was expensive to pull the oil out of the ground, oil prices were rising. The money was cheap. It was a no-brainer, right? And then the money kind of dried up, and then oil prices dropped, and all of a sudden it becomes too expensive to get oil in the same way. But as oil prices continue to rise and they get to the 80, 90, 100 barrel mark there, you're going to see that the oil producers are going to start jumping in more and more with that horizontal drilling. Because, again, it makes it able for them to do it. Because you make so much money. With the price of oil, that the high cost of actually doing, you're still profit in there. I hope that makes sense. So yeah, again, if oil prices continue to rise, the U.S. is going to come back to the forefront of oil production worldwide, and they're going to assert, somewhat economic control over other countries because of it. It just is what it is. Not saying it's good, bad, or otherwise. I'm just saying it is what it is. That's the way it kind of works, right? Just in time, you think the crypto market in general, in terms of time, is coming to a top? I think there's plenty of upside in price, but I think we've only got a few months of time. But we know about options. Yeah. I mean, I think it's probably a good way to look at it. That's kind of my same view has been here. I guess for months now, right? Once we got past the whole idea of it maybe doing a B, right? But even looking at beyond that, it was the idea that, well, if it's not doing the B, then we've got potentially this repeat of this Q4 explosion, and then finishing off, maybe bleeding into Q1 of next year. But I think it's kind of the same way I'm seeing it. A few more months of really, at least right now, until it proves itself different, potential upside, and that upside could be pretty significant. But we still need to get above the all-time high. So until we do that, don't count your chickens before they hatch. Play your shorter term, parlay it into a longer term, but don't count the chickens until they hatch. Make sure we get up there before we do that, right? Let me see here. Let's see here. Asymris says, I thought our plan was to beg OPEC. Oh, we don't have to. We don't beg OPEC. What you talking about? The U.S., man, the U.S. government was loving it when oil prices were so high. I mean, the one side, it's not so great for the economy, right? Though if oil prices are rising, it's usually a boon for the economy overall, right? But still, your consumers are hit by that. Rising cost of delivering things, rising cost of products, because, again, oil is not just gasoline or whatever, but it's plastics and jet fuel and all these other things. But yeah, no, but the government, as far as control, as far as being able to exert some sort of effort economically over the world, the U.S. government was loving it. It was loving it because they didn't have to mess with OPEC. The OPEC says, "Oh, we're going to do this." The U.S. said, "So, go ahead and do it. We'll do this." Because I don't know that there's really anybody other than OPEC that likes OPEC. And even within OPEC, OPEC shows the problem with cartels. So OPEC says, listen, we can only do this much. We can only do this, right? You're a member of OPEC or OPEC Plus. You have to do this. You can only sell this much oil, blah, blah, blah. You know what happens? It's documented all the time. The smaller countries, which are getting the crap end of it, because maybe they're a smaller country, maybe their cost of production are well above the cost of the Saudis' production, so they can't weather these lower prices real well, and so they'll go out and sell it on the black market. Even though they're part of OPEC Plus, and the agreement says, oh, you're not going to sell below this price, they'll go out there and sell it. It's this known problem with cartels. So even OPEC doesn't have the control that it wants to have, right? So yeah. Let me see here. So anyway, so there we go with oil. So again, when you want to know how well the economy is doing, watch, here in the U.S. especially, watch the oil. If oil's booming, it usually means there's a good economy going on, or the economy's getting better. If it starts pulling back, that usually means that there's at least a breather in the economy, if not a reversal happening. So yeah, always pay attention, watch that. Let me see here. We've actually got this channel coming off here as well that we can watch. As you can see, price kind of getting rejected at that EQ area. I guess I could pull it in and get the whole channel in. Really there at it. So something to watch there as far as crude goes, right? What else do we have here? Let's see. What other charts do I have in here? So I've got potential. Let's see. What are we looking at as far as... Oh, stock market. There we go. So stock market's interesting. Let's kind of see where we're at here. So this is the Nasdaq Composite. And I'm looking at a possible... whoops. It's got to go up over here. Maybe a flat correction here. So A, B, and then 1, 2, 3, 4, 5 is C. And then this leads to a 1, 2 maybe heading up. So if that's the case, then that gives us a possible wave 5 target here. 15, 5, 15 maybe. We might see price kind of moving up toward there. Because it give you a, actually, you know what? Let me make sure. Yeah, see, it's down here. So this is 1. If this is 2, right there on that 15-minute pivot, we should be headed up. We can notice that wave 2's termination is right here around the R4 pivot on the 15-minute, which is just today's pivot. That'll change, next Monday. But nonetheless, looking for this move up here to potentially complete wave 5, a 5, a 5, a 5, a 5. Getting all in there. Yeah, so that's what I'm kind of looking at right now. If we can get a breakout above that swing high there. Let's see. The other thing to watch here is when price comes back down, see if it gaps down below 15,283 and 67 cents. This swing low here. There's a small gap between that and this swing high right here, which is 15,265.72. If it gaps down below that, even if it goes up here first and comes back down, that gives us an island reversal, which are rare but significant. So if this goes up to a 5 and even shorter, maybe this just becomes an ending diagonal, right? And then it only gets up here around 15,430 or so. Comes back down. If you get that gap down in this area, again, that's going to give you this island reversal. And that's a pretty big something to watch. There's a potential top coming in. Ventru says uranium stocks taking off. Let's see, you're looking at the S&P. Yeah, so the S&P, so that's the Nasdaq. Looking here at the S&P E-minis. Right here, which are your tradable. Got going on there. Looking at this right here as an ending diagonal. So this larger count, let me kind of zoom out here a bit. As an ending diagonal here, so a 1, 2, 3, 4, working on a 5 here, maybe. Whoops, zoom back in here. Locally, I've got this right now as an AB down here, and then this coming up as a, 1, 2, 3, 4, 1, 2, 3, 4, 5, kind of just finishing up here. As we continue to push up here, if we do to a new high, we might have to go back in here and change this a bit. But right now, I've got this here as potentially 5 done with this shoot up this morning before the NFP numbers. Boom, it drops back down. That gives us maybe an ABC as a 1, 2, ABC as a 3, 4, ABC as a 5 maybe. And then we drop back down below wave 4 here. So if the count's correct, then dropping down below that wave 4 should signal that we're heading down. And we just want to see a drop down below this wave circle 4 at 45, 12, 50. Go down. Now, if things with the NFP are like I was suggesting they might be, not as bearish as everybody thinks, a lot of positivity in there, a lot of positive numbers in there, then, that would be a catalyst to send prices higher, to send the stock markets higher. As long as the crowd is worried about the NFP numbers, whatever, stock market should head down, because that would signal a economy that isn't so robust, an economy that's slowing down. So we'll see if we get the breakout here through the top, and if we do, we'll just come back in and recount it a bit. But still looking at it being, some sort of 5th wave here. And then, of course, the Dow Jones here. Which is the broader one. The Dow Jones is the only one that hasn't hit that new high between the Nasdaq Composite there and the S&P minis there. We're still going sideways. So a couple of thoughts here. If the count's correct and this is an A, then either this is a B here and then this is a 1, 2, and we're heading for 3, 4, 5, or this is an A and then oh, no. What I'm looking at here is this is A, and then this is a triangle is B here. So A, B, C. We'll get a D up here, and then an E down here. And then a pattern target of 303.16 above the wave E termination point. So we should still have D to come up, which should then probably find this 35,460 area maybe, a little bit below that. And then E comes back down probably around the pivot area. And then we'll look for a breakout above wave B to kind of say that's complete and headed up. And so wave 3 of the ending diagonal here has a swing high at 35,631 and 19 cents. So we'd just be looking for 5 waves above that to kind of finish off a 5th wave if that count's correct coming in. And so if this is an A and a B is a triangle and we're heading up for C, then our first thought is to look for a drop down below wave E of B. That'll be the very first local clue that maybe the top's in. Then we want to see the drop down below wave 4 here, the wave 4 support here at about 34,690 and 25 cents to have a bigger clue, a larger time frame clue that the top may be in. But still needing to get down here below wave 4 here at 33,271 and 93 cents to really, to just kind of continue to add to that and really start feeling, okay, on a much larger time frame, that top may be in there. Right there. So that's what we're kind of looking at on that. Let's see here. Let's see. Kind of catch up with you guys. See here. Kind of catching up with you here. What's going on, Lamb? I see you checking in, buddy. Joy Bruin, hey there, says, when you enter a trade on a retest of a support resistance flip, do you wait for a reaction off the level before entering? If so, is there a time frame you like to see levels hold before jumping in? So it all depends on what time frame I'm trading. I watch the time frame I'm trading. If it retests, then the way you do it, guys, the way you properly trade a retest, let's say price is doing this kind of thing, right? And then comes here. See if we do this. Okay. So we'll just do this in terms of, say, Elliott Wave, okay? So let's say there's a support resistance area right here, right? And so I'm not a big fan most often of buying a breakout. I wait for a retest. So in this case, you get the retest, right? It comes back down. And on the retest, it's not that I buy that retest. What I'm interested in is the confirmation of the retest as price breaks out around the latest swing high coming down into it. So my goal isn't to buy here. My goal is not to buy here. My goal is to buy here. Because the breakout above it says, okay, there might be a support resistance area there. I want to see if we retest it. We retested it. Now I want to make sure that retest is good. Make sure that it follows through the upside. So we're looking for a breakout above that, 3 waves down through that second wave there. Because what could happen is, instead of breaking out here, you could have something where it comes down like this. And you're going to buy that retest, right? And then it gets up here. And then it does something like this. And so what happens is, let me kind of make these a different color here. Kind of explain to you what your psychology is doing to you at this point. If you don't wait like I do, then what happens is, if you buy this retest here, let's say you manage not to buy the breakout here, retest, you go, I'm going to go long now. And it goes up. And so what might actually happen is, if you don't wait for the confirmation of the retest, going above the most recent swing high there, then what happens is it many times is going to get rejected at that swing low. And then it'll fall back. And you'll start going, oh God, please don't. Okay, don't go under. And then it'll go under. And then you'll be like, oh, I just got to hold a little bit. It'll come back up. It'll come back up, right? And then what you'll see is price will come down toward this area here. And you're just about getting ready to get out of it. And it rallies off. And you go, oh, no, I'm good. It's going to go. It's going to break back out, right? And then it'll break just above the top there. And you're like, oh, yeah, look, I'm green again. I'm good to go. And then it turns around and boom, drops on down. And it drops back down. And now you're thinking, instead of this entry, now you're thinking, well, it just needs to bounce above here, and it's going to do that. And then it takes off down below that and below this one. And at that point, you're either getting liquidated or you're jumping out at a huge loss. Tell me I'm wrong. That's the way, if you think about the way you act out there with the charts, guys, or you react, this is spot on. This is what usually happens. These are the things you're thinking. Trying to convince yourself not to sell at a loss, that you're going to be fine, that's going to go up the other way, or praying to whatever God you may have that it does, right? As if God's got nothing better to do at this time, or his or her time, or whatever, than to make sure that your trades turn out profitable to you, right? But this is what happens. So for me, I'm interested in confirmations. And it's not just enough to confirm that it's bouncing off a retest. It's to confirm that that retest is a retest and not just a dead cat bounce that takes it back lower. So yeah, I hope that makes sense. Black Man's Guide says, time to sit in cash. Next week is bloody. Potentially, again, coming back to what I was talking about earlier. If the NFP, if we at least get a bounce out of that, it should be a good bounce. Potentially taking most of next week. And remember, here in the U.S., your U.S. players for your dollars and whatnot are not going to be back in the seats until Tuesday. So it'll be a short trading week. It gives the Bitcoin and other cryptos the weekend to kind of rally on higher before they have to do their pullbacks. So yeah, quite possibly. Sure. Michael Williams says exactly right, except for the part where it takes off after my stop losses hit. Let me see. Telluride says, I thought bonds were for billionaires and real estate was stability for mere mortals. I love you guys, man. Let me see here. Lamb says, I'm the guy on the chart where the price hits bottom a month or year later, and then I am able to sell at a break even or profit. If you guys believe in diamond hands, Lamb's got them like you wouldn't believe. If that's your thing, diamond hands and whatnot, there's the epitome of it right there. And I know because he's been with us for years. Love that guy. You love me too? Good. Let me see here. Picture perfect waves. Yeah, right. I know. It's easy to draw them perfectly. That's why I always do this, guys. That's why in Tier 3, man, that's why we do our weekly streams for Wyckoff on Monday and then for Elliott Wave on Thursdays. Is because, when we discuss theory, we tend to draw perfect waves and everything, for instance, for Elliott Wave. Or perfect ranges for Wyckoff. But in reality, it's rarely anywhere near that, right? And so the goal of what I do there every week with our Tier 3 members is to try and help them move beyond just the theory and show them how on a daily basis, how you actually use these things effectively, properly. Because man, oh man, if I had to just go off, when I first started with Elliott Wave, even though I'd been trading a while, it was still really difficult because it's hard to get beyond that. What I was just talking about there, that beyond that theory into that application. There's a big move off that, and I think that's where a lot of new traders with Elliott Wave get discouraged because they can't figure out why it's not looking like those picture perfect things that we all show in the theory part of it. Same thing with Wyckoff. The minute it doesn't work out like they think it should, oh, it's a scam, it doesn't work, it's a joke, it's arbitrary, it's whatever you want it to be. It is what it is, right? At least in terms of people that say those types of things. All these things, guys, all these ways of trading, they all lead you to the same place if you do them properly. And like anything else in life, guys, like any other skill set you learn, it takes time and practice to become better at it. You will not be good at it when you first start, period. Don't kid yourself. If you're using Elliott Wave and you're brand new to it and price goes where you thought it might go with it, that is luck. That is not skill, guys. And I don't think people are humble enough to recognize that. Everybody wants to believe they're better than they are and not as bad as they seem. That's what we do as human beings in life, in everything in life. But the reality is often that opposite. We're worse than what we seem, and we're nowhere near as good as what we believe. But when you're learning how to trade, guys, being humble is where it's at. And I'm not just saying that, so that you're nice to somebody who's trying to teach you something. No, what I mean is that being humble with yourself allows you to open up and listen to what's being taught to you. Again, guys, I tell you constantly, the biggest issue you're going to have as traders is yourself. Your own emotions, your own subconscious. But beyond that, it's this refusal to listen. Somebody's talking, you're like, yeah. Your kind of head's turned off the other way, thinking about something else, and then they're just going over here in your ear, and then you're like, oh, that didn't work. Whatever it was that you were trying, because you didn't really listen. You didn't apply it properly. And on top of that, even if you did, you're brand new. You don't have a lot of skill. You don't know what to look for. You don't know, when you look at it, you go, well, why would I put a wave 3 right there? Why wouldn't I put it over here? You don't know all that when you first start. These are things that become apparent after you've done it for a while and you get used to it. But not at first. Not at first at all. So yeah, just things to think about there. And I hope that makes sense, guys. Let me see here. Let me see here. Let me see here. Asim Risk says, the older I get, the more I find how innovative I can be at lying to myself. Practice, right? I mean, that's what we're talking about, right? And I make a little fun of it here and I joke a little bit about it, but don't mistake that joking and then having a little bit of fun here as a denial of that happening. It happens. I still lie to myself about things. I'm a human being, guys. It's just what we do. But as long as you're paying attention to it and whatnot, you can deal with it and make it less of a thing that you do. And you're going to find that you're a lot better off if you can. When you can. You can definitely do it. Ventru81 says, almost all the trading books I'm reading now are on psychology. Yeah, and that's the thing that a lot of new traders miss out on. Or, again, they're looking for the sound bites. So there's a sound bite about some sort of psychology of trading. And they just like, oh, yeah, that sounds great there. But they don't really understand what it means. They haven't really thought about it. They haven't really tried to understand it. And, again, guys, these are the things that you need to do. The only person you're gonna hurt is yourself, guys. That's it. You're not hurting me. If you don't listen to me or you lie to yourself, you're not hurting me at all. It doesn't hurt me one bit. You hurt yourself. Okay? So keep that in mind. Let's see here. Baraska, what's up? Says, practice is the key in everything. It is. It truly is, guys. I hear people all the time, oh, I don't have the time to listen to that. Oh, I don't have the time to do that. Oh, I don't have the time to... You know what, guys? That's up to you. That's on you. It doesn't make what's being told to you any less true. It makes it less effective for you because you've decided your time is better spent out with your friends, vegging watching TV. Your money is better spent out there eating out and enjoying, every day of your life as if you'll be alive forever. But that's on you. I'm not saying that's right, wrong, or otherwise. I'm just saying that's on you. But it doesn't negate the fact that when you say, oh, I don't have the time, what you're saying is, I choose not to make the time. I choose to value other things in time over that. So if that's your view when it comes to trading and learning about trading, I have no love lost for you. Trading takes time. Period, guys. To learn how to do it, it takes time. You will not become an expert overnight. You won't even become good overnight. It's going to take a while. A while of constant practice. Doing the basics over and over again correctly before you venture onto the more exotic things. That's what it's about, guys. And I only say this because I have people all the time. Oh, I don't have time to watch your video. No matter how long it is, guys. For a while there, I was putting out 10, 15-minute videos, still getting people, oh, I don't have time. Do it in 3 minutes. No. If you don't have time, that's on you. If you don't have 15 minutes a day or twice a day to learn something, that's on you. That's not my problem. That isn't my issue. That's yours. But it's your issue that you're creating for yourself. Very few of you are so busy that you can't do it. Very few of you. Now, some people are very busy. That's fine. I get that. And even within them, they can still choose how they spend the little bit of free time they have, right? And like I said, I'm not saying it's good, bad, or otherwise. I'm just saying don't lie to yourself. Don't try to lie to anybody else when you say, oh, I don't have the time, yet you're choosing to veg on watch TV or to play video games or to do something other than with your free time. Okay? Again, it always comes back to that lying to yourself thing we talked about. I've been doing this long enough that I know when you're making excuses. And if you're making excuses, I'm not going to try to convince you otherwise. I'm going to let you make your excuses because you're not ready to do anything different. I tell you time and time again, guys, most of what I tell you on here, most of the people that tune in don't listen to it. They listen to half of it if they do, and what they do listen to, they don't really pay attention to. They immediately dismiss it, thinking that there's no humbleness. They don't think that they can learn anything. They think it is as they think it is. And this is very prevalent among new traders, amateur traders even. I keep using the word new, but what I mean is amateur traders, those who haven't learned how to be consistently profitable over time. But it's always about excuses. It's always somebody or something else's fault. They haven't yet learned that they control their own future. Let's see here. What's up, Crypto Mackin? What's up, man? Good to see you here. Man, Boris, appreciate you, buddy. Yeah, you'd say keep it on, but I will. Yeah, definitely. But yeah, the psychology of trading, guys, is really, for most of y'all, is the most difficult part of trading. Yet you spend your money and time on these other things. But here's the key, guys. If you can't make it through those issues you have emotionally and subconsciously, whatever you learn here is not going to matter. You're not going to follow the rules. You're always going to find an excuse to bend the rules, to do something different, because you haven't got through that other part of you. That's what's keeping you from being successful. And guys, I'm going to tell you right now, it's not just with trading, it's in life. It's anything you try to do in life. The only thing keeping you from doing and being anything you want, let's be realistic here, guys. Don't give me all I want to be a dinosaur, okay? But, is you. It really is. There are examples every day of people who are in the worst of circumstances who've pulled themselves out. They came from the worst backgrounds. They had no chance, right? Other than the chance they decide to take themselves. There was no, whatever excuses people want to give, white privilege, all this other stuff. There's none of that, right? These are people who have none of that. And they continue to be successful. So your excuses don't mean squat. And you'll have to excuse me if I treat your excuses like excuses. Because that's what they are, guys. And until you recognize that, until you learn to accept that, and then to deal with it, and then to change it, that's all it's ever going to be. And you're never going to get to the point you want to be. It's always going to be somebody else screwing you. It's always going to be some circumstance that you have no control over. It's always, always, always somebody or something else, never you. And yet, in reality, it's all you. Because as human beings, we can find ways to deal with obstacles. We overcome them. You have that innate ability within yourself. You just have to unlock it. So whether it's trading, life, something else that you're doing, whatever it is, it's all on you. Always comes back to whether you believe you can or can't. You are correct. Most people are afraid of hard work, Diego Fiala says, and I agree, yes. I did another tweet here just yesterday, as a matter of fact. Travis got me going on this one. Let me see here. And I started in just a little kind of a tweet storm here, a few tweets, but basically, like I said here, where we go right here. Humans tend to daydream all day about what they do and how, but they rarely follow through. Ideas mean nothing without execution. And I was trying to make this point about entrepreneurs versus everybody else. I'm a trader, but I'm also an entrepreneur. And so I get this question, or not so much lately. I used to get a lot at the beginning. Well, if you're so good at trading, why are you doing this? It's because I'm also an entrepreneur. And entrepreneurs, if you're an entrepreneur, you are driven to build something. And not just something, some things. It's you get done with one and that's not enough. You want to build something else. And this is just something within us as entrepreneurs that we are. So again, like I point out there, questions like, well, if you're so good at A, why do you need to do B? Asking those questions tends to single you out as someone who has trouble executing in your own life. You are that daydreamer. You have all these great ideas, and they probably are good ideas, but they don't mean squat unless you execute. Okay? I talk here about that people who aren't used to taking chances and executing on their ideas, they often get caught up in what we kind of refer to as analysis paralysis. So you spend all your time thinking about what you do and how you do it rather than actually doing it. And when it comes to trading, that's a killer. You sit there and you overanalyze. You say, oh, well, if it does this, then this. But then if it does that, then that and that. Nike's been right all along, man. Just do it. Just do it. There comes a point in your analysis where you have to say, there's enough analysis. Now I have to do it. Bring in your risk management with you. Get out there, get a plan together, use the risk management. But whatever you do, just get out there and do it. Do something. Get moving. Otherwise, you're forever just going to be stuck in this thing where you just sit there and you're constantly saying, well, yeah, I'd do that. Or on a trade, yeah, I'd enter right there. But you don't actually do it. Again, that doesn't mean you just jump in blindly and without any thought. Study what's going on, create a plan, make sure your risk management is there, and then do it. Do it. That's the key. So yeah. Kimo Zombie, I wouldn't say that trading becomes boring. I like to make money. And honestly, I mean, again, my whole structured educational background has been about understanding people as individuals and how they form groups and how those groups create ideas and follow through with them and stuff like that, right? So for me, the market is just an extension of that. It helps me understand what the groups are doing, what the individuals are doing out there. So I wouldn't say it necessarily becomes boring, but, it is a lot almost on autopilot, There's not a whole lot of overthinking that goes on anything I'm doing as far as trading goes. Because, I do have that experience and that time, and I'm used to it, and I've got my plan, and I've got my system, and, it all works for me. But even if it didn't, I'm still an entrepreneur. I'm still driven to build. There is something to be said about creating something that goes on, something that continues to build and get larger. My boredom, honestly, comes with continuing that out. I have ideas that I like to execute. I got things that I like to do. I'm a lot more of the bigger picture when I do things. So I tend to do things for a while and then bring in other people who can continue to do them well, and then I can do my next thing. But yeah. I should be in self-help, not trading, or both. Oh man. But yeah, again, guys, you come here and I take your time seriously that you're here with me, and I try to leave you with things, not just with trading, but with life, because I'm a firm believer, as you guys know, that how you view and how you go through life dictates how you're going to view and go through the charts and go through the markets. So I'm not a believer that you can have this negative view on life and all this stuff and still do well as a trader. I think it's all, even if you do well for a little bit, I think it always ends up coming back to bite you. And so one of the things that I can do is I can help you guys recognize these things that may be holding you back in life that are actually also holding you back as a trader. And so if you can recognize them and then deal with them and work through them, then it's bound to help your trading. Because trading is really just the mental side of it, guys. It really is. And this is why you got large people like Goldman Sachs or these large trading houses that hire these very high-end, very educated coaches, basically. People that have advanced degrees in psychology and applied psychology and experience coaching and all that, because as traders, even at a high-end shop like that, you're still going to have your down days, your down months. You're still going to get caught up in that. And it is worth a lot for the company itself to pay those 6 and 7 figures to those people to help get you as a trader back in the right mindset. Because if you're not in the right mindset, you can lose a lot of money. But if you are, you can make a lot of money. So for the house, it's something that they need, that they should have in there. But yeah. Let me see here. Yeah, I still haven't bought a house yet. Yeah. Real estate right now, noticing a lot more. I've been talking about it here over the last 6 months or so, how the higher end real estate is starting to contract now. You're starting to get the drops in prices. And it's happening a lot more here the last 2 months, I would say. So yeah, I'm in this lease through, I think through March of next year. And so I'm actively looking right now. Yeah. I may remain here in San Antonio. I may end up on other couple of places I'm looking at are Lake Travis there in Austin. I'm looking at the Lake Conroe over there just north of Houston, or even in the I don't know exactly which town is over by Seabrook and whatever over there on the inlet coming in from the Gulf of Mexico, down in that area potentially. So we'll see. I may end up here though. There's a couple of places around here that I'm looking at as well, but I just want to see more. I just want to see more of what the market's going to do here. I can't see buying at the top or within a few years of the top. It would kill me, especially because of what I do, for a living. So, yeah, Lem says his parents got top dollar on their townhome, but now they have to buy. Yeah, well, there's the problem, right? No, actually, this will be a first house, an only house at this time, Ross Mark. An only house at this time. Yeah, I've been, I was up in Lubbock there for law school, and then I moved down here, and I've been leasing down here, watching the market as it was, doing its thing. Just kind of holding off to make that purchase. Because if I'm right about what's coming up the market, then buying at the top is just going to be absolutely stupid. And I just don't want to be a part of that. But it also gives me a little flexibility. I'm really kind of, prior to moving to San Antonio, I was new to the area. I'd only been visiting a few times. Told myself I'd never live in a big city again, and yet here I am. Though now I'm in Bernie, so not really. But yeah, and just trying to figure out where do I want to be at this point in my life. I'm in my mid 40s, getting to my 50s, and I'm really kind of getting to the idea that potentially just want to be on a lake or on a beach or something. Or a bay area, something like that. So, it's been good to kind of take this time and do that and try to figure out, look around, talk to some realtor friends and whatnot and other people that live in these areas and try and figure out where exactly I want to kind of get to, set down roots for a bit. So, yeah. I'm not worried about finding a bottom in real estate. I'm just interested in not buying the very top. I'd like to see a bit of a pullback first. I recognize, especially if I'm correct, that I'm probably going to be buying in high, but I just don't want to be buying at that top. I want to, see this coming down, and then, then we'll be looking at purchasing another property, as the market continues to drop down lower, doing like that. Sure. Let me see. So that's where I'm at there. But anyway, guys, it is 1 o'clock, so I need to get out of here. As always, I appreciate you guys showing up. It's been a lot of fun. I really enjoy talking with y'all and kind of answering your questions and thinking a bit. Sometimes you ask questions that I haven't really fully thought out. So it's nice to get on there and kind of really, think of something in a different way. But hopefully, you've gotten something out of this. That's the goal. You don't have to... Again, guys, I'm not here to force you to believe what I say. But, if you at least come in with open ears, it might at least help you understand things a little bit better, even if you don't necessarily agree with me. It may give you a different view that's even different than mine on what's going on. And that's the whole clue. That's the whole goal of what I'm doing here. But anyway, guys, hey, make sure you're following me on Twitch, YouTube, Twitter, all these places. Because, like I said, starting next week when we come back from our 3-day vacation here, our 3-day holiday, we're going to get into the anniversary of TWC. And so for the next few months, I'm going to be doing giveaways. Like I said, PS5s, Xbox Series X's, and they're US. As far as the where they're used. Yeah, they're for the US, right? They're designed for the U.S., what I'm trying to say. But that doesn't mean you can't, win it and still just sell it yourself because they're still very, very hard to get. And I'm going to still try and get some more to add in more. Maybe be giving away some Bitcoin. Maybe be giving away some memberships. Maybe be doing a few other things. I've got a newsletter that'll start coming out weekly. So make sure you guys watch me on Twitter and everywhere else for that. I'll let you know. It'll be free. And it'll include, every week it'll include a few trade setups as well as some thoughts on, macro ideas and overall market. It's going to be called the Market Breakdown. God, we just got so much going on, guys. I can't even mention it all here. But anyway, just be an exciting time coming up here for Q4. So as we end Q3 in September here, get into Q4. So there you go, guys. Man, I hope you guys have a great day, a great weekend. And I will be back on Tuesday at 11 a.m. Central Standard Time. Until then, you can join us at howtotradetowin.com. We'd love to have you there. Jump on in there. Tier 3 is where it's at. You get everything upon everything, more content than you can absorb in a single month. All right? Oh, by the way, Tiers 2 and 3, we've started something this week, and we'll be doing it every week. On the weekends, I'll put in a poll. We'll remove, for the week, 2 of our daily updates that we do for crypto, and you'll have a choice of which 2 you can vote on to remove for the week. And then we'll have a list of ones to look at, and you can choose which 2. You can vote on which 2 you'd like to replace them for that week. And then, of course, the end of the week, the 2 that were removed come back, and the 2 that were added in go away, and then you have more choices to come the next week. Kind of getting all that done. So something new we're doing as well. So there you go. Remember, the only thing you control in the market is how much you lose. That's it. So keep on with the risk management, all right? We'll take care of you. We'll talk to y'all later.